All right, so you're welcome back to the channel. That's Future Stock Market Wizards. For those who are new to the channel, my name is Flavia, and on this channel, we explore the stock market and how to trade stocks profitably. So, if you are interested in trading stocks on the stock market, trading stock options, then you need to hit the like button, the subscribe button, as well as the like button, and then turn on the notification bell so that anytime we upload a video, you can be notified. Right, let's go down to it. So we are talking about stock trading. Okay, what is stock trading? Stock trading is buying and selling of company shares on the stock markets. And the main stock markets that, you know, I trade on is the London stock market and the New York stock market. And then for the US, we have the New York stock market and then the NASDAQ. Okay, so you buying and you are selling company shares to take advantage of the price movement, whether it is going up or it is going down, so that you can make your profit and then you move. Now, sometimes people also investors want to invest in stocks and hold them for the long term. Sometimes people can hold stocks for 2, 3, 4, 5 years. And if we want to look at what the guru, of stock trading, of trading stocks, that is Warren Buffett says, then you could be holding stock for 50 years to capitalize on the growth of the company and make maximum profits. All right. Yes, so he says that if you buy stock today only to exit, to sell the stock in a year, then you should not have bought it in the first place. We're still struggling with what he has said because sometimes you buy the stock and then, the following day or the following week, you realize that, you've made like 100% of the profit. Why stay? That is what some people may think. All right. But this is the father who has advised us to stay long in the market to be able to have maximum gains. All right. So we want to look at the styles of trading stock on the stock market. What are the various styles? And the various styles, as I have mentioned already, some people can buy stocks and hold them for the long term. And that is years, okay, 5 years and above. And then we have one that we call, and that one we call it position trading, okay. Now the second one we look at is day trading. Day trading is when you enter into a trade, you buy or sell a company stocks, and then you come out to make your profit and come out on the same day. All right, that is day trading. Okay, and then we have swing trading. That is my favorite. I do a lot of swing trading, but sometimes it turns out to be day, which I am fine with. Okay, we'll talk about all those ones because I like to do swing trading because you never can tell what will happen. But then if in the course of the day I get to my point of profit, I exit. All right, we will learn about all these things. Okay, yes. And then which one is left? The fourth one is scalping. What is scalping? Scalping is like day trading, but then what happens is that scalping, you go inside the market, you enter into a trade, and then anticipating that there will be a price movement either up or down. And then once that happens, and then you take your profit, you exit. Okay, and that one can happen severally. People enter and exit, enter and exit, enter and exit, benefiting from price movement and maximizing their profits. Okay, so those are the 4 styles of trading that we can use and apply on the stock market. All right, now first things first. Before you start taking advantage of all these things, you need to find a broker, okay? And that is very important. You need to identify by research. You need to research and then get to know various types of brokers and there are fees, okay? Because when you're trading with a particular broker, there are fees that they charge on your trades. So you need to look at brokers that have low fees, and then you register with them, and then you can start trading. And then I want us to look at one thing also, that is, when you are starting to trade stocks as a beginner, you have to start small. Sometimes we hear these things about how people are making money on the stock market, and then we feel that, okay, you also want to make money, but you are just a beginner, you are not even experienced, okay? So if you are a beginner trader, it is very, very important for you to discipline yourself and start small. Enter trades with small amounts, okay? You may have a lot of money in your account, but because you're now learning, start small, enter small, and then when you get small, you exit, okay? That's within, a matter of some few months, you'll be able to accumulate a lot of money, okay? And then the next point is for you to have a trading plan. How do you want to take your trades? What are the indicators that you see that informs you that you could be entering into a profitable trade? Now, what are the percentages that you have set for yourself that when you enter this trade and then you get that percentage of profit, then you will exit, okay? And the same percentage, what are the percentages or the lines that you have set for yourself that if you see yourself in a losing trade, you will exit? All these things are things that you have to set as your trading plan, so that when you enter a trade and then you are making your percentage. For me, usually I work with percentages, okay? I don't care about the money. If I enter into $100 contracts, or I enter into, let's say, maybe when I'm talking about contracts, I'm talking about options, which I do mostly, okay? I buy and hold, and then I do my weekly trades are options, which we'll talk more about in subsequent videos, okay? So most of the time, I work with percentages. I don't go and I'm looking at the amount. I perfect percentages. I have always decided that I want to perfect on percentages, trading stocks on the stock market. So let's look at it. If you set up a trade, and then your plan is that you want to make, on this trade, you want to make 10%. You want to make 20%. You want to make 30%. Now, on the stock market, if you're a bit experienced, it's very easy to get 10%. Okay, so let's look at it. Let's say that you enter into a trade as a beginner. Because me, when I started trading as a beginner, I used to enter with $50. All right? I will enter the trade with $50. I remember when I started, I deposited my first $1,000. And then with interactive brokers, I trade with interactive brokers. For now, I don't have any second account with any other broker. I trade with interactive brokers. That's an American company. And so I deposited my $1,000, and then I told myself, I said, I want to only trade with 5% of my capital. So I entered the trade with $50. So with the $50, then I tell myself, if I can perfect on making percentages, and then I can always get 10%, then I'm fine. So I enter the trade, and sometimes I get 13%. So that means that I've gotten 13% on my 50. So my 950 on my account is sitting there. You understand? So if I am not making that 13, or I see I've made 13, it moves to 15. Already I've told myself that I want to make 10%. So once I get my 10%, any extra is extra for me. So I exit. Okay, but you made your plan that you want to get a particular percentage. You've gotten the percentage, and you are in there, and we call it over trading. And we sometimes, the common word that stock traders use is greediness. You are being greedy. Live with your profit and then your capital, so that next time you come back and you keep building, and then your capital can increase. All right. So like I was saying, you may want to look at all these ones and put it in your trading plan. And you don't go against your trading plan, because if you do, you may lose your money. All right? Now, I want us to look at common mistakes that traders make. Okay? There are some common mistakes that traders make that wreck their accounts. And one of them is fear of missing out. Maybe there is a stock that has, moved so much, and then you were not aware. Now you have seen the price movement, and then you jump in without analyzing things properly. And that one, if it reverses, you lose out. And it is a common mistake that beginners make in trading stocks. And then number 2 mistake is not cutting short our losses. And that goes to buttress the point that I was making previously. You must be able to cut down on your losses. Sometimes we anticipate that a stock price will move in a certain way, but in reality, it doesn't. So what do you do? And that brings me to the next point. You must set a stop loss. If you have a stop loss set on your trade, let's say you have done all analysis well, and then your trade is moving well. But on the stock market, certain things happen that makes, stock prices move in ways that we don't anticipate. And one of them is news. Maybe there's a major news that has come out about the company, and then it may cause the price of that particular company to reverse. And if it is reversing and it's against you, and there's no stop loss, that is very risky. You may lose your entire amount. Okay? And then the next mistake also that traders make and beginners make is to overtrade, as I mentioned. Don't stay too long. Don't overstay your welcome, we always say. Once you make your money your target, leave. Because sometimes, at least I can confidently say I have 2 years of trading stocks on the stock market. And I know these things. Even not only trading stocks, there have been other instruments I have traded. Sometimes you are making money, and then you have made more than you wanted to make. But because you feel like I can make more, you are in there being greedy. And market reverses, you lose out. You lose out. So these are the mistakes that I want to encourage us never to get ourselves into. And then what we can do is just to stick to our trading plan. All right? And I believe that will be fine on the stock market, making our money every day quietly. Okay. All right. So I want to touch on this thing so that we can end our video, and that is risk management. Okay? Risk management. Now, what do I mean by this one? When you are trading, like the way I trade, okay? If you are trading options, mostly, okay, I buy, I hold for long term. But like I said earlier, I trade options day by day. So if you are entering into an options contract, don't enter with an amount you cannot afford to lose. All right? You see, sometimes we become overconfident, but overconfidence too sometimes can wreck our account. So don't enter into a trade where you cannot, with an amount where you cannot afford to lose. When it comes to contracts, and as we will explain further, when it comes to contracts, you enter, and then if you win, you win. If you lose, you lose. All right. So I will encourage you, as I said, start small. Start also with money that you can afford to lose in case the trade does not go your way. And then with your stop loss, then it means that you really cannot lose all that you have put in. If you apply all these steps that I have set out for us to be able to trade stocks on the stock market profitably. Right. So on subsequent videos, we are going to explore, ways, strategies. We look at technical analysis, and then we'll be able to identify winning trades that really we can enter and exit confidently with our profits. Okay, so I will encourage you to subscribe to the channel and then to like, the video if you have found any value in it, and then watch out for subsequent videos on how to trade stocks profitably on the stock market. Until we meet on the next video, I wish you the blessings of God. Bye.